Uganda Central Bank has cut the country's policy rate by 100 basis points to 9% as part of broader efforts to spur economic growth. This is the first rate cut since October last year. Last month, in fact, Uganda's headline inflation fell to a 16-month low. It actually eased slightly to 1.9% from 2.1% the month before. CGTN's Baleke has been looking at the numbers.
Only a handful of shoppers are passing through Nakawa Market in the capital Kampala. Annunciata Ashaba sells second-hand doormats and bedsheets in this usually busy open market. But she says recently her work has not been as rewarding.
People don't have money anymore. The profit margins from my day's sales can barely meet my personal expenses. I have to pay market dues and taxes for this stall. My stock is dwindling, but I cannot afford to replace it.
Many traders here share Ashaba's story of diminishing sales and low profit. Faced with difficult economic environment, many Ugandans are spending cautiously, which means traders like Ashaba are not earning as much as they used to. Some also say they are piling up debt levels. High interest rates and a current account deficit have dampened Uganda's economy. Weak exports have also been dragging down growth.
Ugandan economy is driven by consumers. GDP by composition, 70% or more than 75% actually of GDP is by consumption, household individuals. So if they are not borrowing, lending is whatever it is, so they consume less. Now, why are they not consuming? Probably they are worried about the income stream going forward.
The Bank of Uganda's Monetary Policy Committee has cut interest rates in a bid to stimulate growth. But economists say more needs to be done at the government level.
Nobody borrows just because interest rates have come down, and nobody lends just because the rates are going down. So we need to know that private sector credit is about opportunities. So is the economy generating opportunities for people to borrow? Because even when private sector credit grows and the demand in the economy is subdued, you're going to create non-performing assets.
Analysts also warn about the government's ambitious infrastructure program. Roads, bridges, power dams, and a new international airport are all being built on loans. The government says the projects are fueling job creation, but it's a risky position in an unfavorable global economy, which the Bank of Uganda blames on the US-China trade war. And for local traders like Ashaba, the volatility could be devastating. Baleke, CGTN, Kampala, Uganda.